Chris Conway joining the discussion now from our Melbourne studio from the Australian Stock Report. Welcome into the show, Chris. Again, strength in this domestic story shows through this hour on that jobs story. What are your views?
On the overall market, Carson, I'm like everyone else, I think a little bit frustrated that this market hasn't been able to break out of the range, despite good jobs numbers, or to the downside, despite, geopolitical tensions. We are just in a grind at the moment, and it's sort of becoming, or not sort of, it has become a self-fulfilling prophecy, and we saw that emphatically yesterday when the market tested the top side of the range towards 5,800 and for next to no reason sold off and created a bearish technical signal, a pin bar up at that resistance level. So, look, I'm frustrated. I'm taking these news items as other people do. There are opportunities within the range, and there's even opportunities to play the range. But it is becoming increasingly frustrating, especially for a trend trader like myself.
And yet the banks for the last two sessions now have been a kind of a line in the sand on the selling. They've capped the losses, essentially. So some gratification, that the CBA story looks not to be as wobbly as it was in previous weeks. There's a bit of a trend now of strength v weakness.
Yeah, well, look, it reached oversold levels, and I, along with a lot of analysts last week, remember being on the show throughout the week saying that CBA was at a level where it's fallen, sort of 15%, and it's approaching that price point where, if it gets there, it's on a yield of 6%, grossed up 9%. It's so compelling when the cash rate is what it is that money will flow into it, and that has happened. So I don't think people have completely discounted the APRA and AUSTRAC and other regulatory issues that surround CBA, but it just got to a point where it was too good to pass up on, and it also coincided with the index being at the bottom of that range that I was talking about earlier, and we all know about, so I won't talk about it anymore. But it coincided with the price action being down there, so it was a bit of an index play as well, if you will.
Rudy, let's go outside the top 50. Let's reflect on earnings season, and maybe a great rotation of sorts could be in the offing, if not already started. So basically, attention back on what's been a largely, in relative terms, ignored sector, say, for the last 6 months. Do you detect an outperform potentially there? Is there enough investor appetite to go for some growth, or is it still pretty much a default to yield post-earnings season?
I think in general terms, and I said this, I wrote this down when I analysed the reporting season. This reporting season we had in August has not given any impetus for the share market to move higher. In particular not, because one of the outperforming sectors were the banks, and they obviously then got hit by the CBA scandal. So that was unfortunately something that pressed it down. In terms of the resources, which was also one of the outstanding sectors in August, we're now facing, as we see with the Chinese data, we might get a little bit slowing down there. I think the share market is still chasing mid to small cap high growth stocks, and you see that with share market performance of the likes of A2 Milk, for example. And for the majority of the market, there's no reason why you would buy these stocks today if you're looking for a profit over the next 2 or 3 weeks.
2 or 3 weeks?
Or even 2 or 3 months.
Right.
Because we have been in this trading range now since May, and last time I checked was September, and it doesn't seem to be any impetus to move out of it.
Chris Conway, just back on, therefore, alternatives. With the dollar doing what it's doing, which is showing every appetite to go clear and stay there beyond 80 now. If HSBC's right, test 90 into the new year. What of the offshore allocation? What say you to an appetite, a play on Europe, an increasingly overweight fund manager bias in that direction? What's the position there? Because, I mean, let's admit, EM is an overcrowded trade. You'd be kind of too late to the party on that score. But time and again, we're hearing Europe's got options.
Yeah, look, to be perfectly honest, Carson, I don't have a particular opinion on that. I mean, I think, I read some research earlier in the week. I think it was from Goldman's about pivoting out of banks and pushing back into the miners. Now, if the Aussie dollar is going to be strong, as you were just talking about, that's going to be likely because the US dollar is weak. It's not really so much an Aussie dollar story. It's further greenback weakness. Now, that helps commodities. So that side of the story makes sense. I don't really have an opinion on Europe. I know, Magellan and companies like that have their funds that operate there, or other fund managers, I should say, have their funds that operate in that space, but I don't have a strong opinion on it either way.
Really, your views?
Well, what we tend to forget in the share market is that a stronger Aussie dollar is also a negative for parts of the resources industry. I mean, think about the energy companies, for example. They're all producing here, and they're selling in US dollars. I mean, that's just one element.
The
other element is that there's quite an audience out there that now thinks that there's enough reasons to assume that the US dollar is bottoming, and that we maybe should be preparing for a comeback of the US dollar, and then we get a completely different dynamic again.
What's which side of that argument are you landing on?
I'm not seeing a rally in the US dollar anytime happening, but I'm on the camp that it might be that we might have seen the lows.
Okay. Back to you, Chris. Release of the day, essentially. All eyes on the one listed department store entity, Myer. The shares rallying on the release of these full-year numbers. On outlook, though, never mind the historic capture on those figures. What are you hearing? What are you liking? Or are you still in the downbeat camp?
Very much still in the downbeat camp, Carson. One of the few things that Rudy and I share is our dislike of Myer. We've both been on the show before saying it's, to use Rudy's term, uninvestable. Look, aside from the numbers today, the question that I would like to ask, and Carson, you're a smart guy, maybe you can answer it for me. What is Myer's competitive advantage? What is the thing that they do better than any other retailer? Is it cost? No. Is it the brands? No. Is it location? No. Are they specialists? No. I, for the life of me, as a simple stock market analyst, cannot figure out what Myer's competitive advantage is right now. Is it just that they exist? Not much of a competitive advantage to me, and they're throwing $600 million at the problem over the next couple of years. I don't understand this one.
Yeah, well, which makes the move by Solly Lew even more perplexing. Is that just a kind of what? It's not so much a pride thing as a well, let's call a spade a spade. It's sort of an ego-sating exercise
not necessarily. Not necessarily.
Okay.
Solly Lew is selling some of its brands through Myer, so it may be a protection of the sales.
Okay, but there's no underlying, to Chris's point, unlike DJs, you've got no land bank, or like Harvey Norman, you've got no asset underpinning it all. That was all flogged by PE.
Well, that's going to come back and bite them in the buttocks, because from next year onwards, they will have to take their lease obligations onto the balance sheet. That's going to have the reverse effect.
It'll make retail food group
it looked smart. It looked smart at some point in the past. Okay. It's going to bite them back in the buttock. By the way, Chris and I have something else in common as well. We both like hair. Although I must say, he has more at the moment than I have.
Yeah, well, if you've got it flaunted, what's going on, Chris, on that score?
Just changing it, just mixing it up, Carson, just trying to keep it fresh.
All right.
Thanks for noticing, Rudy.
Probably the price of razor blades. It's way too high, I agree.
Let's not go there.
Way too high.
So just in broader terms, are you saying this is a short squeeze today, Chris, that's primarily powering the rally for Myer, and not much more than that?
Absolutely nothing more than that.
Yeah.
Out of the release today, I can't see any reason why you'd want to be in this one.
Okay. And really, I guess you're saying here.
Short term, long term. I'm not there short term. I have no intention to be there long term. I sometimes walk through the shops and I never buy something.
There you have it. At least they keep it heated in winter. All right, okay, there's some respite from Mother Nature when you need it. Thanking you both. Chris Conway, Australian Stock Report.